Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for October 18th, 2021. We're going to take a look here to start the day at the dollar index. The dollar index has been a pretty bullish chart as of late. Looking at a continuous contract here and the rally that has been underway since, well, for all of 2021. We really came out of a 2020 downtrend for the dollar, which was on the back of some pretty strong export markets. We saw that trend reverse here to start 2021. Saw a little bit of it, maybe some consolidation back April through May and into the start of the summer time frame. But particularly for the dollar index, we then saw basically a period of strength since end of June through just a few days ago. We've had a pretty bullish tone to the dollar index. Back trading into the 18-day moving average here around 93.93. The 55-day moving average down around 93.15. 100-day down at 92.54 with the 200-day down around 91.80. A pullback for the dollar index at this point would be coming off the back of a pretty strong move up into resistance area, which kind of starts from the lows here at 94.65 that we were holding in March of 2020 for the dollar. And goes up to and through that 96 area where there is a 50% retracement from the dollar highs from 2020 to the lows here of 2020 that formed. Start really the lows of the recent rally up we've seen for that dollar. Now, the dollar is important, of course, for our export markets, and particularly the row crops that we're oftentimes watching here in this strategy of the day and of the week update. And of course, that's because it's pretty indicative of what kind of purchasing power our export partners might have. So remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But I do invite you to join me for my Strategy of the Week webinars on Thursdays at 2 p.m. Central. You can sign up in the links in the comments section and in the information section of this video. Also, to get our daily free Zaner Daily newsletter, to get our entire team's commentary and current market conditions. Do sign up for those and leave your likes and your comments in the sections below. We are really taking a look here today. Let's begin with the soybeans now that we've gone over the dollar, seen a bit of a period of dollar strength. Maybe the dollar's turning over, right? We've had a few days of downside back to test that 18-day moving average. A pullback back towards 93 to 92.50 would test our higher, our 100-day and 55-day moving averages, and back into testing the highs, the old highs on this market. The daily chart for our November soybeans trading here into the end of the day to close the day above 1220 again. Kind of a nice clean figure to get back above. The third day now, the second day running of higher highs and higher lows after a break out of that inside day consolidation and a hold, really, in my opinion, of that $12 figure. 18-day moving average up around 1244. The 200-day moving average is actually the next moving average above us here at 1286. So 60 cents of just mean reversion back to the 200-day area, which is also where there is a trend line against the highs that we would expect to see as resistance on maybe the first time up there. 100-day moving average is at 1323 with the 55-day moving average actually coming lower here around 1290. So you've got the 200-day, that downward sloping trend line, and the 55-day moving average all at that 1290 area. Probably a pretty interesting inflection zone if we get up to test it. So let's take a look at the 4-hour chart here for soybeans. Finishing the day up 3 cents, 1220 to kind of close out the day. We find ourselves right back into the 50% retracement from the highs of October of 1262 down to the 1184 lows. That 50% level comes in around 1223. We nestled right up against it here into the end of the day. We were able to close the day, and in my opinion, I think we went out above that 1221 high from yesterday. Certainly our settlement price was up there. So we settled and closed this today above yesterday's high. That's a pretty good reversal off the 1210 lows of the day and finishing up 3 cents, but up 10 cents off the lows. Pretty good close for November soybeans. Definitely finding our way here in a 4-hour kind of channel higher, or well, I would call this, I guess, a 4-hour channel lower. We've got trendline resistance again against the highs that has continued to be resistance if we find it around the 1260, 1280 area. But the channel support that we've seen, that trend line against the lows here that was drawn from our lows from last Wednesday through Thursday, was met here this morning, and we found that bounce. So diving a little bit deeper here on the 15-minute chart, full 50% retracement from that 1184 low to the highs after comes in around 1204. So wouldn't be surprised to see a retest of that $12 figure. But closing back above 1220 kind of leads me to believe that we might see some technical buying here. A little bit of a trend line against the highs that we started to go through here today. So a breakout higher. There's not much but air until we get back to 1260 highs of the month. That old range we saw, the market clearly cleared out that area. So getting back above this old range, 1240 to 1260 area, definitely would open the door for that move towards $13. And at this point, I think we need to be on the back of some stronger exports. We saw the capitulation and the move lower that we've been looking for in November beans down into that 1180 to 1140 supportive area. It was that dip below $12 that really mattered. Now we're finding our way back above. We can't ignore the fact that maybe November beans aren't that bearish anymore, and we might be finding that harvest low. Again, we're going to be looking for those strong export numbers and daily flash sales out of China. There weren't any today. A little disappointing to the market, but we still closed positive and with a pretty good uptrend now to start. First area of attack to the upside, I want to see the market get above now 1230 again, but I am pretty much consolidating to be a buyer in the dips for November soybeans, and really probably pushing that risk out towards the Jan or really more towards the March timeframe, and expecting that rally to take us into and through the next new year. So let's take a look here now at the corn market. Looking at December corn, finding its way back up inside the range we've been in. 18-day moving average down around 531, 55-day at 537, 100-day at 547, and that 200-day moving average, there it is, popped up in the chart there, 519, kind of that supportive area that we've seen December corn hold for us here in the near term. And I think will continue to be supportive, given that December corn has been very, very comfortable above $5. In fact, when we go further out and we look at December 22 corn, look at this market trending all the way back up to and on its way towards the 540 area, in my opinion, to make a new contract high for that December 22 corn. So good strength there in the back months, starting to build that carry in for the longer time frame. But nevertheless, December 21 corn, middle of our range, is back around the 555 area. I feel like this chart is consolidating sideways and just trying to find its way back there. So, hey, 3-day reversal now for corn off of its recent lows and the capitulating lows we held here at 506. A failure in December corn really there to break down and get a retest that $5 area again. Pretty interesting to see us back on up in this range. Probably got legs to get us back to retest the 545 area as corn's just been sideways. But we can't deny we are holding a range that's closer to lows than to highs. We'd be a little more bullish, I think, if we were ranging $6 to $6.40, talking about a breakout to $7, right? Well, we're ranging at lows still below that 50% level from 593, the highs from August there, down through the 497 lows of October, comes in right around that 545 area. And we kind of held up a rally and choppiness up into that area, rolled over, capitulated with the beans here at this 506 low, and then have now reversed. So maybe that's it for corn. A strong energy market, strong crude market here, a strong ethanol crush will keep a bit under this market, I think. And corn next year is probably going to be a market where we're talking about trying to have to buy production, not just for acres away from beans, mainly acres away from beans, but because of that rising input cost for corn, with nitrogen getting so incredible. And there are ways of talking about hedging that, but the futures for fertilizer aren't great. We can look at LNG or natural gas and diesel costs, but at the end of the day, the liquidity isn't there to do any hedging, unfortunately, for those input costs for corn just yet. So the alternative might be just buying futures in the corn to hedge against the ultimate price rally that we should see, and the reownership to own that extra corn in the event that we see kind of a price rationing because of a fear of lack of supply due to rising input costs, right? So the end products, we need to protect those margins, and a rally in corn price would do just that. So the 15-minute chart now for December corn, kind of a nice multi-day rally up off of the lows so far. We've got a trend line support here that has been holding now through the last few days. Continue to monitor that in the near term. We started to hold a small trend of 50% long, held off of the lows here at 512, rallied up towards its targets. New swing from low to high here, never really traded. We ended up holding what I would refer to as the same anchor new high, or an extended long here down into 523. So same anchor new high here. Look for support for corn down into the 526 area, that 526 to 524 area. And then, of course, in 520 to 516 is the important full 50% area if it gives a pullback. Now that we're starting to press, however, above some kind of, I think, trend line high here or trend line resistance we had corn, any kind of pullback here down into 524, 526, down into testing that trend line resistance now as support, testing back into the 50% line. Even from today's low, 522 to 533, could be coming around the 528 area. Look for that supportive area around 526 for corn to continue higher here in the near term, and for another test up towards 550. I think that's probably in the works here in the near term. All right, so let's take a look now at December wheat. Again, a nice kind of reversal here. Finally, some outside price action. We had a big range day there with the Wise report, a range day follow through the downside, and now 3 days of reversing that. We're still very much in a range between 720 and 740, but I think we're gearing up for a breakout against the highs here, which we can take a look at a trend line on our other chart here in a second that looks like it broke, very similar to corn. But nevertheless, consolidation here in the wheat looks like we're coiling up for a move, and can't argue. Wheat looks like we're going to potentially break out towards the $8 highs and maybe above. So down on that breakdown of that 4-hour chart now for December wheat, we have the full 50% retracement from our 676 lows through the 763 highs, that down into the 720 area here. That 50% level is holding on this chart. We're certainly holding the 50% short from the 763 high down to the 712 low, but we have broken back above that trend line resistance that was holding against the highs. We're even pulling back into a full 50% long from the 712 low to the 740 high. So you can see these fib levels getting reaction the first time they trade. Now that we're testing it a second time, I think we run the risk here of breaking out from 736, going up to 750. And if we do, we could find ourselves in a bit of a breakout for this whole market, higher. But we certainly are wanting to probably test towards 760 in the high end of this range to see if that consolidation is going to continue or if we're going to break out higher. I favor us going higher now, trying to ration U.S. wheat away from the global market. And by the way, if the U.S. dollar index continues to roll over and get weak here, wheat prices almost need to go higher to keep our wheat away from being taken off of our hands from global exports. So we'll see what happens here. See December lean hogs coming off of a 50% level on their chart as well. Came down here to almost fill this gap and leave it open, get a reaction higher. There's, I think, a bit of a trend line and a breakout towards 80. I think could be bought for momentum higher towards 86. Let's take a look where live cattle finished today. I think less than impressed. I'd like to see it continue straight up and through 31 to 33 here. I fear that if it falls and rolls over below 131, it's got another leg lower down towards 122. Very much trading like a risk-on, risk-off asset. The last 2 days of consolidation, though, not liking this after such a strong up day. Why did we not get that follow-through? Why are we consolidating? If cattle fails to break out here into tomorrow's trade, I will be a little more fearful that cattle might be topping. And I don't want to hate that, but it is what it is. So Let's continue to watch this 1220 area. It looks like we're kind of going through here for the soybeans. Corn back above 530 is a good look for December too. I think both those markets have some more upside. Wheat, Chicago contract looks like it's starting to give some kind of breakout. I mean, that could be the same for all of our wheat. But as we can see there, that coiling up here for wheat might be a spring pointed upwards, and we'll see if that continues. And the dollar index, that chart looks kind of like it is topping a bit here. And if the dollar index continues lower and rolls over, I anticipate seeing a pickup in our export markets, particularly for our row crops, and we get that seasonal demand that we've been looking for to justify the rally and the reversal to make a harvest low. So with all that being said, everybody, thank you for joining me here for a Strategy of the Day recap for October 18, 2021. Feel free to sign up to join me for our Strategy of the Week webinar or to receive our free Zaner Daily newsletter. You can find those links in the information section for this video in the comment section below. Leave your likes and your comments. Always love hearing from you guys and what you want to hear more of from these videos. Have a great day, and I'll be back with you as price action develops. Take care, everyone. Hold it out, and we'll look at that. Hopefully see a little bit of